Bloomberg Audio Studios.
Podcasts, radio, news.
We do have some breaking news out of Boeing. The CEO is saying that the manufacturer needs to restructure operations. Here are some of the details. Boeing to delay the launch of the 777X airplane by 1 year to 2026, and Boeing to cut 10% of its workforce, warns of deeper third quarter losses. It's going to cut its total workforce by roughly 10%. These job cuts to include its executives, managers, and employees. This all coming, of course, amid a big cash burn by Boeing. Of course, we just concluded the fourth week of its strike. A lot of pain going on over at Boeing. You see the shares bouncing around after hours, initially spiking, now back to unchanged. Traders trying to make sense of what's going on here. But what we know right now is that Boeing, of course, delaying the first delivery of its 777X program to 2026. Also, those job cuts, Boeing to cut its total workforce by roughly 10%, Matt.
Yeah, this is awful news for Boeing, maybe worse news for the union. Each month of this strike is forecast to cost them $1.5 billion, that according to JP Morgan. But they already burned through $8.5 billion in the first half. And because of that cash burn, they had to raise $10 billion in debt in the first half. Now Bloomberg has reported they're likely to raise another $10 to $15 billion in a secondary offering in this half. And they said now that revenue is only going to be in the third quarter $17.8 billion. It had been estimated at $18.6 billion. So they're not making any money. They're burning through cash because of this strike. And now they're going to have to cut or at least slow the delivery of the 777X program by another year. So it just really doesn't look good for the unions, for the workers that have gone on strike and have rejected an offer for a raise of 25% or 30% was the last offer?
Something along those lines.
Yeah.
I mean, the negotiations we know have really been locked in a stalemate. So really no progress being made. Again, fascinating to see these headlines coming out of Boeing.
We're going to get you Bloomberg Intelligence, senior aerospace, defense, and airlines analyst George Ferguson right now to weigh in on these headlines. George, really glad you could join us on such short notice on a Friday. What do you make, first off, of the delay of the 777X program? They say they won't be giving their first deliveries out until 2026. I don't know when they were planning to do it in the first place. So what do you know?
Yeah, it's supposed to be a 2025 event. So pushed out, maybe about a year. This program's had some challenges getting to the finish line. So, look, it's not good. It's not a huge moneymaker for the company. In fact, it's not a moneymaker for the company right now. And so for the financials, not that important. For the customers who are waiting for airplanes, more disappointment. You always run the risk that they're going to go away. Biggest airplane in the sky now that the 747, A38 are gone. So there are not a lot of good substitutes. So I'd say, disappointing, but not terrible.
Talk to us about the labor picture here, because, I mean, the headline that's catching everyone's attention, in addition to the financial details that we got and those delays, is that Boeing to cut its total workforce by roughly 10%. And interestingly, those reductions include executives, managers, employees. We know that Boeing is locked in that strike right now, that stalemate with its union. That has been going on for a month, that they haven't been able to do manufacturing over on the West Coast. I mean, how does that factor into that month-long strike?
Yeah, tough times are ahead. And that's what CEO Kelly Ortberg told the company when he told them there's going to be a 10% cut, tightening their belts here. It looks to me like they're posturing for the long haul, right? I think they're telling the union, we're going to slim down. We need to save a bunch of money, and we're ready to kind of go the long haul on our negotiations with you. We're going to take pain on the executive side as well. And I think, look, once the strike is over, there's still, some pretty big challenges here for profitability. And so I think this is part of, how they're going to address it.
Yeah.
A little bit surprising to me, but yeah.
Yeah, and this coming from the Wall Street Journal, Ortberg saying in a message to employees while outlining this plan that we need to be clear-eyed about the work we face and realistic about the time it will take to achieve key milestones. Clear-eyed, definitely a phrase to underline there. We were talking a little bit about what this means for the space program. For example, we were having that conversation with David Weston, and then, now we're having it too. When you think about what could go, where Boeing could trim, what's the potential future of the space program here?
Yeah, I mean, there's a lot of small pieces at Boeing that you might be able to get rid of and make a little bit of money. But, I've heard a lot of people sort of talk about GE and their turnaround and how they hived off a bunch of businesses to raise cash. I just don't see that potential here. We even saw that at Rolls-Royce where they hived off a bunch of businesses. Mm-hmm. I think there's small stuff they could make cash with. I honestly don't think space is something they could make much in selling. I think Musk's SpaceX is really kind of taking it to the government launchers, I should say.
You don't think SpaceX will buy the Boeing space program?
I don't think so, actually.
No.
I think that SpaceX has got the rockets they need. They've got the capsules they need. I personally think long term, I think Boeing does want to be in this space, no pun intended. And so I think that they will push through with their space program. I think it's part of their government contracting. It should be part of their core competencies. I think they'll retain it, but I guess we'll see.
And I'm hogging this conversation. Do you want to question Matt Miller?
Well, I just don't know how much leverage workers have, or if the workers have far less leverage when the CEO comes in and says, you know what, I got to fire 10% of this company. I'm not going to be able to deliver the products that I wanted to next year. How then can the workers say 30% is not enough of a raise for us?
Yeah, so I think, again, this is part of that posturing. I think if you're the union, though, you say, look, a decade ago, we didn't get much at all. It's our turn to get our increase. And they're seeing, I think, organized labor get it all over the economy. And I guess I would come back to, you can't build the airplanes without the union. So I still think that, despite this announcement today, I still think that there's more power with the workers right now. Again, now we're going to, and this is part of, I think, Kelly Ortberg getting ready to gird the company to go a bit of a distance in this strike, maybe to get the union to rethink their position. But I still feel like the union has more strength here, unless Boeing's willing to take it longer term.
Right.
I think that, bear in mind, they're building the 737, which is the moneymaker and the way out of this mess too. So
right.
To me, that's kind of like having one of the better chess pieces. I guess it's the queen, right?
And George, really quickly here, you think back to just a couple of days ago, you had S&P Global Ratings warning that they could downgrade Boeing to junk. I have to imagine maybe that's put a little bit more urgency at Kelly Ortberg's heels. Do you think that these moves will save them necessarily? At least when it comes to the credit rating.
So this is a pre-announcement. We don't typically see pre-announcements out of Boeing. I personally think that this is a precursor to an equity issuance, and that maybe it comes next week. And I think they're gonna try to shore up the finances here next to go this long haul against the union. And I think it's, I think that the rating agencies are concerned. I will tell you, the cash burn I saw, right, we're looking very quickly at these numbers, wasn't as bad as I had feared. I think they're about $10.5 billion, did they say, in cash right now? That's enough to run the company. I thought they might be sub $10 billion. Wasn't as bad as I had feared. So that might help the credit rating agencies. And if you raise some equity here, if you raise 10, 20 billion of equity, that might keep the rating agencies happy as well. And that this might be designed to try to stave, I think it is designed to stave that off.
10 or 20. I mean, there's a big difference between those two numbers. I've heard 15. Is that what you're hearing as well?
I've heard between 10 and 20, so I don't know, maybe that is 15. I mean, when you go to the equity markets, I don't know. What's the difference between 10 and 20? I think,
True.
you're going to dilute anyway.
What's the difference? What's $10 billion between friends? George, great having you on the program. Thank you so much for joining us on such short notice to talk about this breaking news. So Boeing to cut 10% of its workforce and delay 777X deliveries.